Hi, this is Shira Rubinoff. Welcome to Insights in Tech. I'm here with Myrna Soto. Myrna, thank you for joining us today.
My pleasure. My pleasure.
Myrna, can you please introduce yourself to our audience? Tell them who you are and what you've done. I know the list is long and incredible, but I'd love to hear in your own words.
Sure. I'll keep the list short. But my name is Myrna Soto. I am currently serving as a corporate director, member of the board of directors for three publicly traded companies. I have the blessing and the honor to serve on the board of CMS Energy, Spirit Airlines, and a company by the name of Popular Inc., which happens to operate as a super regional bank under the names of Banco Popular in Puerto Rico and Popular Bank here in the Northeast. Formerly a global CISO, I like to call myself a global CISO emeritus, was the global CISO for Comcast Corporation for 9 years, and most recently had the honor of serving as COO for an MSSP here in my home state of Florida by the name of Digital Hands.
Wonderful. So, Myrna, we just saw the economy implode and unemployment is at 14.7%. If you're investing, what would you be looking for today?
Well, I will tell you, it's a great question. And as you may recall, and I didn't mention it before, but I also serve as an investment advisor for a venture capital firm. And one of the things that we've been thinking about and talking through is the fact that we are identifying the areas that will have a bit of a pent up demand post this COVID crisis. We believe that in the areas of cybersecurity in particular, what's happened in this day and age where most companies that may have been preparing for more of a digital footprint and more of a remote work environment and things of that nature, were somewhat pushed into doing this pretty rapidly. So we're looking at a number of areas where we're looking at cloud-based security and above and beyond the traditional cloud container security, above and beyond things like CASB, although very important. But we're looking at a number of opportunities to invest, in particular cyber, where it relates to what I like to call human-centric security. So the security around the user, the security around the data. So very, very human-centric and data-centric. And of course, all the other components of our security landscape are still very important. But I think there's going to be a pent-up demand in that area right now.
I think that makes a lot of sense, certainly as we call the future of work. And look at the future today. Look where we are. We're sitting here with our new world of remote work and how everyone's looking to secure the perimeter, secure their employees, have the employees properly authenticate themselves in. What does the future look like? And certainly it makes a lot of sense what you're talking about. So do you feel also that there's room for startups to actually gain a foothold in this new environment as well, when traditionally at this point in this type of ecosystem, they'd say that venture capitalists and even angel investors are looking to hold on to cash right now?
Yeah, it's interesting because there are a lot of folks that have talked about the slowing of investments.
Yeah.
And although it kind of feels a bit slower, I think what's really slowed are the interactions. In other words, the pitches, the ability to gather with startups and gather with entrepreneurs and hear the pitch and understand the pitch and do the collaboration. The investment space is very collaborative. You want to meet the team, you want to understand the concepts, you want to talk about customers. And right now it's a little bit more difficult, but not impossible. We're still seeing a very healthy amount of capital going into some very target markets in the cybersecurity space. I think some of the traditional items that had a lot of momentum, like endpoint security and a number of other things, they're still very important and still viable investments. But I think that space has become a little bit more crowded and it creates a little bit more difficulty in the current ecosystem where the collaboration isn't as broad. But we're still seeing a lot of great investments. I mean, the number of investments has shrunk a bit. And again, I think there's going to be a pent up demand. But I still, get updates on a daily basis on which PE firm is investing in what, who's buying what, who's putting in. And I'm really happy to see that although we have this global crisis and there is some uncertainty, that a lot of the capital markets are still very interested in coming in and coming in early. The challenge is going to be being resilient in this time. I've recently, just this last week, had the opportunity to sit with an entrepreneur who was going over her pitch. And I'm always a big proponent to help, women founders and women entrepreneurs to understand how, they get access to the capital markets. And the pitch was just stellar. I won't reveal what it is because it wouldn't be fair to do so. But the pitch was stellar. The challenge was, how do you show a path to profitability while you're having to manage through this pretty volatile time and show the resilience of what your business plan is and what your roadmap is. So I think that's really a bigger issue right now than the capital markets not wanting to invest. And for all intents and purposes, it's probably the best time to invest.
Really interesting. What about the piece that, investors obviously find extremely important? You invest in the team, you're investing in the people. And a big part of it is getting to know the team. Are they capable? Seeing how they interact with each other and having that one-on-one type of interviews in person, which you can't put a value on that. In people, it's a whole different experience. And from, different discussions and different involvements I've had, that has been a crucial part of when it comes to investing. So how are investors kind of bypassing that? Because they're not putting it on hold because we don't know at this point when we could actually sit in the room and really socialize with these people. Where's the gap there?
You're 100% correct. One of the things I had the opportunity to advise a number of venture capital firms when I was still an active executive with Comcast for many, many years. And then, of course, when I stepped away from my corporate role at Comcast, I joined Forge Point Capital as a partner and an investment advisor. And one of the things that I learned immediately about the space was exactly what you just said. The importance of understanding the quality and the makeup of the team. We will always invest in good technologies, but it's the team that really has the most prowess to make something happen and the confidence that the investors get. So what's happening now is, since we don't have that opportunity to gather, don't have that opportunity to have the human interaction, we're having to kind of adopt what you and I are doing right now. Having more conversations via video. And then there is the reputational items of the team. It's tapping into the network. Do you know so-and-so? Can you tell me about your experiences? Blah, blah, blah. Obviously, with full permission to do so. But really that reputational aspect and the ability to connect the dots from a performance and the ability to deliver is the most important piece. So good old-fashioned referencing, I hate to say it, is happening as we speak. I got a call just 2 weeks ago about somebody that I used to work with that is currently an entrepreneur, and they wanted to know, hey, when you work with this person, tell me a little bit about their resiliency, tell me about how they dealt with crisis, tell me about how they demonstrated leadership. And that is a vetting process that, because they don't have the opportunity to be with them socially, they're going to be able to use some reputational networking to get that type of data. But you know what? Fortunately, people are adopting a lot more of this video interactions, and we can make it warm and we could still make it very fruitful for that purpose.
So a two-pronged question here. Is this process going to be sped up because we don't have to wait to schedule in-person meetings? Or is it going to be more delayed because, we're going to have that many more interviews, that many look-arounds? And the other part of this question, is this going to become the new norm? Everybody's looking to time as the most important commodity in life, which it is. You can't buy time. So how do we get more things done more quickly, get involved in more things, but be very careful with expending our time in areas that it's being wasted?
Yeah, I think what's going to happen, and of course this is my opinion, and there'll be other folks in the venture capital space that may have a different opinion, but I believe, and we've seen it even in a lot of industries, a lot of traditional industries, a lot of organizations that are either looking at security imperatives and trying to analyze different opportunities, where they've actually made this work better than they ever thought it could work before. I mean, the amount of people that are interacting and collaborating on video and on Teams, on Zoom, like you and I are right now, is accelerating the adoption, but it's also proving that there are benefits. In other words, it will work. I do think that it will change the way that we operate across the board. It'll change the way companies hire. It'll change the way companies cultivate teams. A much more openness to remoteness, I think, is going to be, it's already happening right before our eyes, but I think it'll stick. I do think that when we think about investments and in the venture capital space, It really depends on the comfort level of the firms. Everyone has to remember that the firms have a responsibility to their LPs, the folks that actually invest in the funds. And your number one criteria of success is obviously the performance of your fund. So I do think it'll still be a hybrid. I think that when life goes back to the new normal and the ability for us to physically interact more, I don't think it'll be slowed down per se, but I do think we're going to take advantage of both the remote interactions and then rapidly followed up with a personal in-person interaction. I think it's going to be a little hard to say it'll go away completely.
Yeah, makes a lot of sense. And let's pivot right back to the cybersecurity world for a moment. So what would you say is missing in the big guys' arsenal when it comes to cybersecurity? What do you think will go wrong, even at major banks, for example? Can you give us a little bit of a highlight around that?
Sure. So the reality is that this current crisis has started to introduce of an evolving and a very different threat landscape than what we were fighting before. And as you know, the threat landscape changes very dynamically. It's never static. But what's happened now is because of the increase in remote work, the requirement to be able to conduct pretty large scale business transactions with a diverse and very fragmented infrastructure, I think we are on the verge of potentially having somewhat of a cyber incident in this space. Don't necessarily think banking per se, because there are some very strong security parameters and regulatory requirements in the banking space that fortunately give us that added protection. The Treasury and the Federal Reserve and all the entities that regulate the banking industry require. And fortunately for all of us, our banks meet, fortunately. But I think what we'll see is the gap that existed before, that some of us talked about, some of us that have been in the space for a long time, we get on stage and we have these conversations about what's missing, what's not working, what's working. And it's really what I like to call the platform play, right? There's so many different control points to security. And going back to my earlier comment about the need for it to be what I call human-centric security and a platform play to what it is that we're protecting. The network has evolved and changed dramatically. The adoption of cloud, much more native cloud companies, all of these things require us to have a much more integrated approach to cyber. That's where the big guys, when I say the big guys and gals, the companies that have been able to put together different technology components and try to bring together a platform play is so very important. Now, there's been a lot of change in the landscape. Broadcom purchased Symantec and they have a strategy around what they're going to do with those assets. McAfee's got a strategy. All these bigger players have a strategy. There's still a need for very innovative investments and innovation to come out of the startup community. But I personally am looking for who is going to be that next player that's really going to put together and truly integrate, not say integrate, truly integrate things around our internet behavior, our user behavior, trusted insiders, third-party risks. Right now we're still engaging with third parties and we're doing all of this remotely. What is our third-party risk and what is our data protection?
That's key. Oh, yes.
Totally key.
Yeah. Well, Myrna, thank you so much for your valuable insight.
My pleasure.
Look, as always, I look forward to talking to you again soon.
Thank you, Shira, and thank you to your viewers. Take care.